Good morning, everybody. Happy Friday to you. Nice sunny day here in the Baltics. Cold again. I really shouldn't say again. It's just for me now. Being back in the States. Warm September trip. Finished it up. Did a quick stream yesterday based on the, maybe perhaps some of the weakness in price people are feeling. And I wanted to continue to address that today with the power curve as usual. So here we have an update for you. Good morning, Midwest Picker. What are you doing, man? You're up so early. You don't live in Europe, right? You live in like West Coast. Is that right? Arizona, if I recall. Super late your time, no? Appreciate you joining. Mountain time? Midwest. Central. So 8 hours. That means 3:47 in the morning? 2:37 in the morning, right. Okay. Well, thank you for tuning in. 3:47, that's what I thought. Yeah, 3:47. Let me know, guys, if you want. No, all good. Let me know if you want to see any other charts here. I'm just getting back into it after being away for some time. I went through this chart yesterday, and I added sort of the different days between bands. But then I realized that's not actually good, so I'm taking that off. And we talked about means and medians and modes, and I'll try to just continue. I like to continually iterate these charts if they're if they can be helpful for people during nerve-wracking times. And I think people are pretty nerve-wracked right now when you see this price slipping. We had a big dip close yesterday, right? There's closed down to 109. The day before we closed at 113. And we continue as of today when I pulled into the model 109,567. That's 5K below the power trend. I want to go through the math a little bit more just to make it clear, because people were asking some good questions yesterday and it's helpful. So remember, this trend line is the all-time trend. I take all the data and I draw it, and then we can extrapolate into the future with that. But it didn't always look like this, okay? It more looked like this, all right? I've shown this before a few times, but when there was less data, and if you can imagine, this is sort of every day painting where the power trend would hit. But, I could draw 1,000 lines, or 6,000 lines, but you can see the slope is obviously faster. Right? This is kind of, the dotted line is kind of like the tangent of the power trend, kind of. Then it flattens out here, and then goes again, was it boom in 2013, then flattens out. And really from the end of 2016, as I've talked about many times, we're pretty much, the evolving trend pretty much stays very close to the all-time trend, okay, which is a good sign. It's a good sign. Now I want to show you the mean, median, and mode. Okay? I think so too. Midwest Picker. I think we get a rally. There's just so much bearishness to me that it seems like we'll get one. But just to show you sort of the strength of the math all time. Now, when I'm going to show the mean, median, and mode, I'm not showing of price, because that is a different thing. Those are like for TA charts, 200-day moving average, 200-week moving average, all-time moving average, or whatever. Those go back in time from today. What I'm doing is taking all the time, running percentiles, and the main thing is that these two trend lines, both as the evolving and the all-time, is how we sort of govern the bands of probability. And the important thing to understand is price is obviously either always under or above trend, right? So here we're obviously way above a little bit. We've just slipped under. But obviously when we want to ask the question, okay, like what is the majority of the time? Where is the price, above or under trend? Now I'll start to answer that question. So on average, the mean is right on trend, right on trend. What I'm doing to find this number is, all right, and this is a round number. You see 1x. It's actually slightly above, and you can see it's right here. The black circle here is the mean, and this didn't exist at the time. So I know it's two black lines, but you just look at the icons. The mean is very close to the actual power curve itself. But it's not the mean price. I'm finding the price based on where the price is relative to trend. And that's what I mean by the mean here. So it's a different sort of calculation of mean than you might anticipate. So if you looked at, all right, just to again explain. Today, right now, the price is 109,567, okay? 109,567 divided by the trend, which is 114,978. Sorry. All right, so it's 95%, 0.95x price versus trend. That multiple is how I determine all of the other metrics. Okay, so if you take all the different multiples over the lifetime of Bitcoin, you average those values, it actually comes out to close to 1x. Okay, so that is another very good sign that the trend is a good indicator. When the mean multiple around the trend is usually about 1x, or actually it's a little bit above, in fact, a little bit above. Because we get some high multiples here, right? Much higher than, say, the lower multiples, and so it actually pulls it up a little bit. That's the mean. Now let's look at median. Median is if you take all of those multiples where price is above or below this evolving trend over time. It is the evolving trend, the triangle. Where's the median multiple? And that means if you take all the multiples and you stack them next to each other, you pick the one in the middle. Where's that? It's actually below. Okay. And it changes, right? I'm showing you how it evolves, right? So it actually, it's always, you can see it below trend, right? The black square is below the play button. All right, so here we're always a little bit below as far as the median is concerned, and we still are below. All right, and what's the value? 0.8x. Okay, just rounding to the 10th. So in the lifetime of Bitcoin, wherever the power trend is, and right now it's $114,000, if you take the ratio of price to trend in the lifetime of that analysis, the number right in the middle of all those ratios is 0.8x. You know, we could analyze this, like, is it good support? Is it something to break through? Maybe. I'm not exactly, you know, I haven't really done this math. You can kind of see it does actually act like pretty good support here. And then if it falls through, it's out. And we've broken above the median here. Perhaps it will be support again. I'm not a TA guy. I'm honestly not. I'm just doing the math to give us comfort about where we can be. All right. And the last one, which is a little bit goofy, is the mode. I say this sometimes. So the mode, unlike the mean and the median, is we take all these multiples where price is above or under the power trend at any given time. And again, this is the power trend at any given time. It's here. It's not this. This is the all-time trend. But where the trend was at the time will give us a little bit more accurate info. So it's higher here, higher here. Again, we run the math, we run the numbers. you have a set of multiples where the price is either above or under trend. The average is about 1, a little bit higher. The median is 0.8x. What's the mode? The mode is if you actually look at the numbers, 0.8x, 1x, whatever, what is the number that is most frequent? And you have to round here, some precision issues, but rounded to 2 decimals, it is actually this. It's a little bit weird looking, a little bit jagged, but it's only 0.5x. Okay. So it starts up very close to the all-time trend, then it falls. All right, I don't actually know the multiple at the time. I'm just showing you the latest. Okay, so from actually the end of 2023, it has moved to we have moved to a mode of 0.5x. It's another interesting number. It's a lower number. So there are 3 different sort of just traditional math ways to look at it. I know that they're all black lines. Maybe I can change them in the future, but I'm even going to take the trend off. So here's the evolving trend. Mean, median, mode. But the important thing to understand with this analysis, like how I'm finding the prices here, like, all right, by the end of the year, the mean is very close to the trend, right? 125,000. The median, 96,000. The mode, 60,000. It has nothing to do with the price directly. It has everything to do with the price versus the trend. So this is another thing why, doing the math, the regression is, I think, helpful. Because if you have a strong trend line, as we do with Bitcoin, you can run a lot of math from that trend, and that can govern your greed and fear, let's say. All right, so taking all the trend lines off, just looking at the, and again, it's a question of multiples. Where is the price at any given time, above or below trend? So it's actually interesting. I thought the mode would be a little bit higher, but it's still only 0.5x. So again, if you took the universe of multiples, which is 5,600 data points, look at them all. What's the number down to 2 decimal points that is the most frequent? It's 0.5. It's actually like 0.48x or something like that. It's a 50% discount of the trend, interestingly. That's the most frequent number. It's not the average. The average of all the numbers is about 1, a little over 1. And the median, if you stack them all up, pick the one in the middle, 0.8x. So there's a lot of math there, a lot of different things. But this, again, just to try to give you comfort to show where we are, this is the number. So turning the mode into price does look a little bit iffy, if we can say that this is sort of some support number. Where have we hit the mode? All right, let me take off the mean and median. We hit the mode here, coming off the 2011, discovery of Bitcoin by a lot of people. We hit the mode here. Start of the crypto winter, we were hitting the mode. And we might have not hit it again. We did hit it slightly here then when it bumped up. And so again, let me give you a little bit more clarity on the mode here. It says 0.5x in the tooltip. That's the taking the lifetime of numbers. But before then, it was actually a different number. That's why you see this jump. So you have to back into what it was at the time. So basically, it's down to 0.5x here. Let's get the trend. Right, so here you see the trend. There's 0.5x, right? And the trend is 58, so where did it go? Back to here, 14. So it's 14 divided by 58. So actually, yeah, and basically half of that. So very interesting. Even up until September 2023, the mode was only 0.25x, which to me is a shockingly low number. But I guess we can say it. That goes to the explosive growth of Bitcoin versus the trend. So mean, median, mode. And then if we want to sort of, again, go back to the trend, again, the trend is not the mean, it's not the median, it's not the mode, it's the OLS, ordinary least squares. Basically, a lot of stats, standard deviations are in there, basically finding the best fit trend line. It's not exactly the mean, not exactly the median, not exactly the mode. It's here. And then just putting my, again, I'll put these 4 up. All right, I got the 0th, 10th, 90th, 100th. The 100th and the 0th percentile are just not really going to happen again, I think. These are the most extreme moves that ever has occurred in Bitcoin over or under trend, okay? So again, showing the evolving trend. There you see it for, let's take this off just so you see exactly what I'm talking about. This move actually might have not hit there. I think it might have been here. It was here. So June 15th. No. June 10th. June 10th was actually the best ever multiple of price over trend. Price over power trend. It was 7.8x. We're never getting there again, in my opinion. No bull, no Bitcoin hyper Bitcoinization. It's just statistically, it's so rare. I just don't see it. And we go back to the FedWire chart. Even getting to hyper Bitcoinization is almost an impossibility because the Bitcoin network needs time to absorb all those FedWire dollars that go through the system every year. $1 quadrillion worth. Bitcoin does 7. It's a nice story, but I don't see it happening. Okay, so $35 on the 100th. That means 35 divided by 4, you get 7.8x. That is the record of the multiple. And then if you see the record under, it happened just a few months later. November 2011, somewhere here. I guess here, wherever, it's one of these. Price was about $2.30. The trend line at the time, $19. So that's a 0.1x multiple. So those are our extremes. Here's our mean, median, and mode. A lot of numbers. Hello, Sirodon. Thank you. Let's go back to gold. I haven't looked at it, honestly, in over almost 2 weeks. I'll pull it up. I don't have all the valuations or metrics, right, like I do here, but we can pull it up. Good morning, Yuri. You got to be a capitalist, man. Got to be a capitalist. I'm pretty much well on record saying that I don't think the real economy has much to do with Bitcoin still. 95% of what you see here is the network itself being adopted. It's my belief. It's just the network. Yes, you need more liquidity. Yes, Wall Street helps, all that stuff, but that's still part and parcel of the growth of the network, the adoption of Bitcoin, which still is 90 to 95% of the action. Going back here, before I get to gold, let's now just look at the 10th and the 90th. Okay, so I have the 0 and the 100th. I put a 10th and a 90th. The 0th and the 100th percentile are just not going to happen again. So now we have these tighter bands, better looking bands. Then we can see where we are. Okay, so many data points. The thing doesn't get today's date enough. There it is. 109,000 at the moment, 5,000 below trend. The mean, look at the mean, you can see it's slightly higher than trend. All right, so that just means on average, the mean of the ratio of price to trend is slightly higher than 1. The median of the ratio of price to trend, 0.8x, and then the mode, pretty deep discount. I need to count the mode, actually. I'll do that for you guys because it's probably not as much as you think. It's just that's what the mode is. It's, it's just the most frequent value. Let me 1 second. Yeah, it's only 724 days. So mode, again, I don't think is that helpful. We've had 5,600 days, and the most frequent multiple rounded to 2 is it's actually 0.48x, 0.5x. That's still only been 10% of the days. So I don't have much stock in this mode, but I just wanted to show it. That's the most frequent multiple of price over or under trend. It's actually been the most frequent, which is still only 10% of the time, is 0.48x the trend. All right, so you run all that. Let's put the all-time trend line back. Let's take off the mean and median. And we get back to what I've been showing you guys a long time. Again, as bearish as it is, we're still right on trend. Could fall well behind. All right, let's put the 30th. This is like something of a good support based on the levels 2 years ago. All right, so I would say with extremely high confidence, which is best I can do. We're going to be close to, in my opinion, the trend, 125K and up to the 9, simply because we're in the still in the bull stretch. If we fall down to like that 30th percentile, 64,000, I just see so many buyers. You could say it's some mathematical support. That means the 30th percentile means 70% of the observation is going to be above that number 3. I don't see it happening. And then the last thing to clarify, if I put all the bands here, all right, I showed the days between bands yesterday. It's not actually that helpful because in theory, they're all a tenth of the time. All right, so 5,600 days, so it's 560 days. But as you notice, if you remember from yesterday, there were like more between 5, 6, and 7. There were like 700 days, and then on the outer bands there were less. That's a precision issue. I was checking it again this morning. It's just depends on how many decimals you round to. Like if you say, for example, look at in the tooltip number 5. It's 0.8x, very close to the median, 0.8x, right? I can pick 0.8x in my numbers and then see how many times we see something between 0.8x and 0.9x, but is it 0.8001, whatever. I took it down to 4 decimals and you'll still get that discrepancy. But anyway, I'm giving you guys a lot of information on the methodology, but in principle, you can say 10% of the time exists between each line in theory, in principle. And so again, just with all these lines, I think extremely high confidence by the end of the year, which typically we have the boom. Where's my number 8? I would say 125 to 170, very high confidence. I'd be very surprised if we are below, simply based on the 4-year cycle and based on this model. All right, let's look at gold. 1 second. Very good point. Very good point. We can be done with September. August, a slow month. September, better, but October, November, the best, if I recall, based on the data. So back to your question, Cyrudon. I just see this as part of the same story. It's not broken at all, but it is for sure lower. So here's in ounces of gold. So these numbers are ounces of gold that Bitcoin is valued at. It is absolutely true that Bitcoin is falling below gold. Jury's out. Jury's just out. I have a feeling this is gonna rise. I could be wrong, right? Extreme buying of gold by central banks. I need to get some charts up of that. But if you look in this band, okay, so we're extremely discounted. Bitcoin valuation in gold terms, right? We're at 29 ounces of gold, whereas the trend itself is 62. All right, so 50% discount to the trend. I just don't see that lasting. It's such a superior asset to gold that if you're a gold bug and you miss Bitcoin, you might start seeing this and say, wow, my gold is actually kind of worth a lot now. Do I necessarily want to hold the rock, or do I want to hold a more fungible asset that I can easily transfer across the globe? It doesn't mean we're going back up to level 9 by the bull by the end of the year. 75 multiplied by 1.9x, 1.9, which is 137 by the end of it, or start of next year. Let's go back to exactly the end. 127, right? 68 is the trend in ounces by the end of the year. Again, we're nowhere close to that. So you're absolutely right that gold is really valuable compared to Bitcoin, compared to the trend. Compared to the trend, the most important thing to say, compared to the trend. Until it's invalidated, I'm not going to invalidate it. So I see boom times for Bitcoin versus gold. This is just a very low number. We're basically hitting number 4 there. If you look in the tooltip, number 4, 0.5x, right? We're half the value of the trend. We've been as low as, of course, we've been down to number 1 even, but maybe more common, even number 2 or 3, which is 0.4x rounded. I guess I should go to 2 decimals here, but I like to try to keep it simple. So high 0.4x, low 0.5x. Zoom in, show you exactly where we are. Actually, yeah, we're closer to number 3 than 4 at the moment. This is extremely discounted. And by the way, it's funny when we say discounted, right? Like, let's go back to 2017. 1 ounce of gold per Bitcoin in 2017. So do you really think Bitcoin's getting cheaper in terms of gold at $100,000 Bitcoin? It's 30 times more expensive. If you listen to Peter Schiff for the last 8 years, as usual, not only would you have missed out on the dollar gains, which are obvious, but the gold gains were 30x. Dollar gains were, 100x. Gold gains 30x. You still missed it. So I wouldn't say at all that the power trend in gold is like broken, or it's just, gold's doing very, very well relative to Bitcoin at the moment. Remember, 95% is in the chart itself. It's in the power trend itself. Having said that, let's go ahead and look at the old macro for the US through August still. 37.3 trillion in debt. Fed holds 6.3 trillion of that debt. That means the Fed holds 16.9%. The max that the Fed has held is 28% of federal debt. So there's plenty of room to go back. We know that that's going to come up here very soon. Trump's going to get his low rates. And this is going to continue into election season, by the way, which is a year from now. The president always gets the rates that he wants from the central bank, even though they say that it's independent. That's just not the case. The president will always get the interest rates that they want. So that's just kind of like gasoline on the fire for Bitcoin. But like I said, I'm really not. I think all this stuff is very interesting to look at, the money supply, central bank balance sheet, the debt of governments, but it's a small component of what Bitcoin is doing. When Bitcoin is, $30 trillion in value, then I'd say it'd be a different story. Now it's only $2 trillion in value. Only. Right? Even though that's a top 10 stock valuation. So anyway, mean, median, and mode, I think it's a helpful way just to understand. If I took the mean price of Bitcoin over all the time, it would be different, right? So let me just do that because I don't have it offhand. Let me just calculate it for you. So the mean price of Bitcoin is only, it's actually lower than the multiple, $18,000. It's an all-time mean. That's why people do, these 200-day moving averages and everything. But a more appropriate way is to anchor yourself into a trend and then take the means from that. So that's what this is. You're anchored into the trend line. I don't care about this $18,000 all-time mean price. I don't care about the 200-day moving average. I want to know what the trend tells me. And the trend tells me, let's go the trend versus the mean. This is how the trend looked at all times. The mean is slightly higher, right? And so we are still, according to the mean, again, it's not mean price, it's the mean ratio of price to trend, which is slightly higher than 1x. So, therefore, we're slightly undervalued on the mean at the moment. Does it mean we're going into a huge bear? Again, I have no idea. But it would seem pretty remarkable if we've had this run and then we fall back down to these like deeply discounted territories of, sorry. Maybe I should take it to 2 decimals. This is actually 0.9 something. It's probably 0.95 for the 60th. It's just so much So much data. Yeah, it's 0.95. So the reason this number 6 says 1x, but it's a bit lower than the black solid line is because of rounding. I mean, rounding on my my tooltip. I guess I should take it to 2 decimals here. More changes. Anyway, brass tacks. You can step away from the markets and come back, and we're going to be pretty close to these trends. These dips, these massive pukings are fairly rare. Okay? By the nature, by the definition. All right, 70% of the time, you're going to be above number 3. We pulled above number 3 back in March of 2023, right as Silicon Valley Bank was going bankrupt. We'd been through the Celsius, Luna, FTX madness, and we pulled back above. We're nowhere near that. They're nowhere. It's incomprehensible to me that we get to that level. So then it just becomes a question of probabilities. All right. 3, 4, 5. 30th percentile, 40th percentile, 50th percentile. Number 5 looks like a pretty good number to say that's like the lowest possible we can go by the end of the year. It can always be wrong, but seems very unlikely we test these levels. It is not yet. Thank you, Siradon. I will get it up there. I got to keep making tweaks to the charts up there, and I know I want to get the PSR chart, the price to sales, and also the Bitcoin gold. Let me put the price to sales up for you right now. Again, I say it 1,000 times, but it's just like I'm changing these charts all the time. I changed them this morning. It's just I can't, unless I take something that's sort of very simple and concrete that won't change a lot. I just don't have much up on my site compared to this chart engine that I have running for you guys here. Pulling it up. Give me a second. Okay, I changed this yet again. I don't want that up there, do I? All right, I can't pull that up right now. But I can pull up a different PSR. Let's go this one. Sorry for the dead time. All right. So here again, this is the 90th and above on the PSR. Remember the PSR is price to sales ratio. Price is price. Sales in this case is, let's take all the Bitcoin network inflation or new coins, the issuance every 10 minutes, plus fees rolled over a 365-day period. All right, so the annual sales of the Bitcoin network. How much power is sold to the Bitcoin network? All right, there's a ratio there. So you have then price, or you can do market cap. All right. I think this is actually market cap divided by total. It doesn't really matter. You put it into a per share or a per coin ratio. But basically, this is market cap price divided by the sales trailing 12-month minor revenue and fees. You get this you get this line right there, that black line. All right. Also a power curve, although not a great power curve, 70%. I mean, still pretty good, but not as good as you would hope compared to the price itself. As usual, the 100th is just a crazy extreme. So then we have the nice bands of typical. And this is only 90 percentile and above. All right. As you see, we're still nowhere close. Not looking at price here, just looking at the multiples. All right, so this is kind of weird. It's multiple upon multiple. But it's the Bitcoin market runs at the value of the Bitcoin market, the Bitcoin network, is 137 times more than what miners make on a trailing 12-month basis. And this number is not exactly backwards compatible. All right, so unlike price to sales in other industries or price to earnings, this number generally keeps growing. You see back here in 2017, it was 100, which was the top. 171 in 2021. Now we're not quite to the prior top, but we're growing. And obviously, this multiple is even out in lower and back in 2013. So it is what it is. It's just it's a number. You follow it. You got to, again, anchor this to a trend, which I've done here. It's a power trend. And then we see where we can be. Relative to the trend, we're hot. We're definitely above, but we're not at the 90th and above level. So in my opinion, again, nowhere near top. Does that mean we have an intermediate top, not a blow-off top right now? Totally possible, but just nowhere near a top. I'm done lecturing for this, guys. Let me know if you want to see anything else. This remains the best guide to me. Let's go out to 2030. $556,000. And remember, I actually do expect this to be pulled higher again. How much higher, I'm not sure, but through historic booms, we do pull the trend higher. We usually pull it back down with a big puke, a big crash, right? But this dotted line here, see how it's higher than the solid black line? That's because of the massive boom here. Same thing happened in 2017 here, and in 2013 here into 2014. $23 million Bitcoin by 2050. We hit $1 million in 2033, according to my model, April. Only 8 more years. We're as far away from $1 million as we were from 20,000 in 2017. So that's pretty wild, right? This also shows you the strength. That's actually a good point. I need to figure out how to graph this, but think about that multiple. All right, so Bitcoin now is 100,000 roughly. 8 years ago, it topped at 20,000. That's a multiple of 5x. Now, from now until 8 years from now, 2025 till 2023, we get a multiple of 10x on the trend. So the trend itself, because of the sheer dollar value, the multiple actually can increase over time. Although this will not always be the case, okay? Because again, the growth rate is falling, but just the speed of the trend at the moment will do that. We actually have pretty, the numbers are plenty big. Even without saying that Bitcoin is not an exponential trend, which it clearly is not. Plan B and plenty of other people are misleading you if they say that Bitcoin is exponential. It's just clearly not an exponential trend. Good morning, Daniel. Yes, I need to chart that actually. 8 years ago, we're 5x higher than the top. 8 years from now, we'll be 10x higher on a trend, which is a powerful trend. Let me show you again. I've shown this 1,000 times, but for newcomers. All right, here's the power trend. 96% R squared, not a straight line. Here's an exponential trend. 86% R squared. No chance we're on this trend. We haven't even touched it since April 2022, and it's just, we're shoehorning in an exponential trend here with number one. It's clearly not an exponential trend, the Bitcoin network. It's just not. Go out to 2030. What's the projection? 500 and, as you see there's my $560,000 number on the power. Exponential gets us to 42 million. Will be great. I wouldn't complain, but it's not happening. Plan B tells you that Bitcoin is an exponential asset. You need to actually look at the numbers to see how absurd some people's projections are. Just look at the numbers side by side. Here's his 2020 model. Massively incorrect. It looks kind of like an exponential trend. He's also using gold, silver, platinum, palladium growth rates, which are exponential, not power, so it's not going to make any sense. His 2019 trend happens to be better, but he also used gold, silver, exponents. Still is not going to make any sense, but it does catch. So far, it has caught the tops. We'll see if it catches the next top. It might. It might. But as I've said many times, if you look at, say, the difference between... So, okay, here's Plan B's 2019 trend, which is still the best fitting of what he published, is number 6. Number 4 is my own, it doesn't really matter, just an evolving power trend on the stock to flow ratio, which is the best way to do it. Okay, so you can see it's lower, right? Quite a delta, by the way. $500,000 difference, right? See that between number 6 and 4? A few years out, $500,000 difference. It's not a great model. And also, let's look at... So this is better, to be clear, this is better than the blue lines because he's using like gold, silver, and just nonsensical coefficients in these extrapolations here. But if we take just the Bitcoin data, which is how you should do it, all right, so just time of stock to flow value, which again is sort of a caveman way to do the inflation rate, and then compare that to what the stock to flow model would have predicted in 2016, it's still quite a far way off. It doesn't look that much of a discrepancy on a log scale. It is. All right, it is. Here's September 2025, September 26, 2025. $109,000 price pulled into the model. Power trend 114. All-time stock to flow 347. Stock to flow only using up to 2016 data 572. All right. That's $230,000 delta. Now let's do the same exercise with the power trend. All right, here's the all-time power trend. Let's pull the only stock to flow from 2016. Amazing. Incredible. You can barely even see it. All right, let's go back to 2020. Again, my rounding, not rounding, my, I can never pick it sometimes. There we go. There we go. Which model is better? A stock to flow model, which is $230,000 off. And none of them are close to the current price. Or the power trend, which is $6,000 off from its 2016 projection. Both of them within 10K, 11K of the current price. Good morning, Satoto. How are you doing? I'll keep running this, right? I mean, this updates. These things update every day. Number 4 and number 2, and of course number 1 or the price updates every day. And again, when I'm talking about a good model, I'm not necessarily saying about price predictions. Of course, that's a great thing. It's helpful for us following Bitcoin, but I'm talking about the nature of Bitcoin. The red values are sort of a ham-fisted way to do a power curve. They are power curves, actually. It's like I said, it's a power trend on the stock to flow. But Bitcoin's stock to flow is irregular. It's every 4 years. It's not as pure a signal as price. And it also has a little bit of an exponential feature to it, in that everybody knows we have a halving, right, every 4 years. That is equivalent to a negative 16% year-on-year change in the issuance, right? The equivalent, or I think this works, a 16% change per year on the supply. Negative 16% on the issuance, 16% change on the supply. But it's an irregular function, and it's, again, you're shoehorning in something that you shouldn't do, basically, because it's not going to be as helpful. I'm trying to explain this the best way I can, but it's more of a ham-fisted way to do a power curve. And as you see, the projection is clearly different, right? And nobody can say with certainty, never. But as I look at this, right? Remember, this line is going to stay forever. I'm just locking it in and projecting. That is the dotted red line. The solid red line will come down as we add more data, but it's not that good as an indicator compared to the power trend. Okay, so I don't have confidence in this model. Not that I need to know exactly where the Bitcoin price is at any given time. It's great for everybody to try to do that, but this is not how the value of Bitcoin grows. Stock to flow is just a terrible representation of that. And hopefully you can see the difference here. And then if you just put in wacky coefficients, like this, you get an even more crazy one. All right, so if we go out 20 years from now, the model that got Plan B 1 million followers on Twitter says that the price of Bitcoin in 2045 is going to be $12 trillion per one Bitcoin. This is one of the models that got Plan B 1 million followers on Twitter. $12.2 trillion per Bitcoin. It's just, you don't even have to really make a comment. The 2016 estimation of a pure stock to flow, which he's probably done now, but he doesn't. I mean, he didn't do it in the beginning. He was just holding his earlier predictions. But the 2016 would be 17.5 billion per Bitcoin. Again, I would be happy with these numbers. And the all-time power trend on the stock to flow variation as of today, which is not that stable. It's going to keep going down when we have this shock of the next 4 years, which the model doesn't know about yet. It doesn't know that that shock is coming. $6.5 billion versus our power trends versus like 2016 data and then 9 more years of data. Those number 2 and number 3, or number 3 and number 2 respectively. 11 million, $12 million per Bitcoin. In 20 years. I'm going to go back to my hobby horse of telling you guys. I guess it's good to read, to catch up on certain things in the economy, things you're interested in, but I've cut my teeth over the years with a lot of newsletters that either promise the moon or scare the shit out of you and say the world's going to end. By the way, we're in the thick of it here in Eastern Europe right now. We got drones flying in Poland, Russian MiGs flying over Estonia. Don't get me wrong, I'm not for a minute not clear-eyed on the threats that we faced. But there's a big difference between writing in sort of paragraph form that Bitcoin is going to $1 gazillion because the government prints too much money, and repeating that article week after week after week after week after week, versus chilling out, watching some videos of the data, and you can see the difference for yourself. It's highly unlikely that Bitcoin goes to this exponential curve. I need to get another chart out now as well about lending on Bitcoin is a thing now, right? It's Debify has sponsored this show before. There's Ledin. There's all sorts of products now where you can borrow against your Bitcoin, lend against your Bitcoin, or lend your Bitcoin, I should say. The only way that Bitcoin gets back on this exponential trend, or gets on an exponential trend, let's say, is if the fiat system takes it over. Not sure I want to say the only way, but in my opinion, the most likely way that Bitcoin gets back to this sort of a super strong exponential growth. And it doesn't have to be this growth, by the way. It could be like, imagine the black line, the power trend, where we are now, sort of straightening out, getting to a faster growth rate, which is probably more likely. So, of course, I'd love this pricing, right? But what you see with straight lines on log scale is compound interest baked into the formula. You see credit baked into the formula. Bitcoin doesn't grow that way. So the only way that this black line could turn into a straight line and start to have these more bombastic projections is if, let's say the most likely way is if the fiat system compromises it, takes it over. It's still an asset that you can hold individually, but you know, you're going to be KYC'd out the wazoo. No one can no Bitcoin at any merchant can ever be accepted again by a panopticon of spyware and government oversight, even if you're buying like Panera bread or something. Some people think we're already close to that now, but we're not yet. I mean, we're not there yet. But that would allow, you know, a system that tells you, okay, you can only hold this much Bitcoin in this wallet, but you can borrow against that Bitcoin gladly with dollars or euros. Then that would allow this curve to go straight on log scale. It would allow interest. So that's my thesis. On the flip side, if Bitcoin envelops the whole financial system, I really got to get this in chart form to show you the theory. But again, if Bitcoin envelops the financial system and everybody's thinking in terms of Satoshis, and there's a limited amount of Satoshis, and every 4 years, less and less Satoshis come into the market, even if there are other Satoshis in the background that might be incentivized to lend at profitable rates or let's say good rates, over a long enough horizon, there still is less and less Satoshis every year. And we have never seen that in the financial system. Even under a gold standard, there is more and more gold every year, not less and less. So it's a key difference that I think a lot of people are trying to figure out, myself included. To be clear, if the financial system goes power or Bitcoin goes exponential, I think Bitcoin will probably be, you know, Bitcoiners could be fine either way, but Bitcoin going exponential is less exciting. Could be more exciting for the dollar value of Bitcoin, but that means you're just going to have lots of credit wrapped up behind an ever shrinking amount of Satoshis, which will cause more financial crises. All right. I'm meandering again to different topics. It's still a wide delta, but this is a good delta, let's say. I think even 3 is too much of a discount. All right, from the days of the ETF being approved, early 2024, we have not hit this number 4 or even number 5. Let's even leave it at 5. All right. That's also the median. 0.8x the trend. All right, which is the median as well as the 50th percentile, which, sorry, of course it is the 50th percentile. That's another point I wanted to make this video. The median is precisely the 50th percentile. Okay, so you're going to see here how that goes right into the 50th percentile. You take all the observations of the multiple, stack them up, Take the one in the middle. That's the median, 0.8x. It's like 0.78x. All right, so let's take these two lines as our guide to the end of the year. I think this is like pretty, it's a wide delta, but it's still like, I just have a very hard time seeing that we're outside of this level. 96K on the downside, 250K on the upside. I know it's a big level, it's a big delta, but pick your poison. Buy more if it goes low, sell a little bit if it goes higher. Never financial advice, but these are the levels to me. Good question, Daniel. I do not know. I know that from my research only that the European Central Bank is scared of dollar stablecoins. So dollar stablecoins threaten the euro, which is a pretty big reserve currency in the world, right? Again, I need to get this chart because I want to show you, but I think it's dollars, gold, and then euros are the three biggest international reserve currencies held by other nations, right? So other nations hold dollars the most, then gold, then euros. So the Europeans, of course, are scared of further dominance of dollar stablecoins, even though dollar stablecoins are actually not a reserve asset, right? Treasuries are a reserve asset, but you can kind of back into that. Obviously, this is what stablecoins do. They buy treasuries. So they're scared of it. They're scared of treasuries, scared of dollar stablecoins. But like anything, like any other CBDC, a central bank digital currency runs counter to your constituents. Your constituents are your banks, if you're a central bank, and so a CBDC will simply take away the deposits of your banks, which are your constituents, your shareholders, and B, they will take away the revenue of your shareholders because those less deposits means less money to lend, means less interest. So I just don't see. That's why you see most of the. It's probably going to happen. They're going to try to do it just because Europeans are stupid with their, their legislation, their over-regulation. My understanding is they'll just have limits. All right, so it's kind of a way to get everybody into the system, into the matrix, but you'll have limits. Like you can have a euro wallet on your phone governed by the ECB or whatever your local central bank is in your local country. But you can only hold like 1,000 euros or 5,000 euros in it. I mean, it's just stupid overall, right? It's like, it's just stupidity. But that's what they do. Here's my clear answer. I do not know if the cycle will be different this time, but I am not going to say that it's not. Which means I'd lean that it could or will. Of course, I don't know, but everybody's bearish right now, and that sentiment usually tells me the market's wrong, right? When everybody's bearish. It's look, let's just circle back on January 1st. If we're still hanging around the black line, right? We're not even close to the 9. Then I think you'd still have to give it 3 months after that. All right, just let's cover our bases. If we get to March 2026, and this is just slowly grinding up this black line, or maybe falling back down to the 5, the median, then pumping back up, but we're not close to the 9 or the 8, then I would say it's over. I would say new era. That would be my answer. But I'm not discounting it yet. Let's get through the end of the year. Let's have some optimism. maybe some hopium, that the prophecy could be self-fulfilling? Good question. Yeah, exactly. And the US is the last country that needs to do it. I mean, there's literally zero reason to do a CBDC in the United States. And actually, Republicans have been pretty good on that point. There are so many other instruments to hold dollars that having a central bank digital currency is not one. Just not at all. If we get to, you know, it's also possible, Cyrudon, that we just extend it, right? We might take 6 more months, might take a year. It is true, as you say in your question back here. Thank you, Daniel. It is true that cycles are different than the power curve. So I literally, in a caveman way, am only going towards the 4-year cycles. We see the 4-year pumps. I'm not trying to do anything fancy other than just observe what the 4-year pumps do relative to the trend. And that, I think, that is the most grounding thing you can have in Bitcoin. Because you know that the technology is valuable, you know that it's censorship resistant, you know that you can send it anywhere, and you know that grandma, every Thanksgiving in the United States, finds out more and more about it, which is usually a hopium time. Not saying that those are the reasons that the pump occurs. Again, it's kind of a mystery. Some people say it's because of the 4-year halving. Some people say other reasons, but it seems to be 4 years. So the fact that we are not close to what we were doing, say, again, we were way ahead of it in 2021, but let's go back to 2017, right? I know I've showed this before, but let's just look at it. By this time in 2017, we were above the 8. But not by long, right? Look at that. We were above the 8 only for a month. So that's why I just think everybody, can relax on this a little bit. Like, it was only a month. 2017 was a pure top. Pump, pump, top. And okay, so we're not above the 8. Let's go back to 2013. It's also kind of a pure top, also double top. Look at that. 2013. Okay, this is like such less market data, I know. Probably looking into this too much here. This was, really early days. Power curve was kind of early in its formation, but still we're under the 8. Now we're under the 8 and the 7. So it is definitely different. Like, it's definitely slower. But I think if you think about a lot of the trading view analysis, the people that say like we've already topped or whatever, they're bearish. No more alt season. I don't know, whatever they say. Again, I cannot predict tops and bottoms. What I can look at is probabilistically where we are. First of all, it's completely normal, on trend. And certainly this stability since the start of 2024, right, since the start of the ETF approval, it is more solid. It is more, what's the word I'm looking for? Stable, consistent. I can't see a time in the past where we had that much consistency around the power curve. Usually, right? Blow above, fall below, blow above, fall below, back above, fall below. This is pretty. Of course, we're above and below all the time, right? But it's like the delta is really shrinking. But I'm still not ready to discount the 4-year cycle. Yeah. In fact, I'd be pretty confident of that as well. And I've said, you never know. It could be high people in high places in the U.S. that are LARPing on crypto that might get rugged if there is a big drop. You're absolutely right. I mean, it's just this market's right. The pendulum swings. When the pendulum swings, it doesn't stop. So if we go high, it's not going to just stop right in the trend. It's going to go back the other way. And I know that's kind of a caveman analysis, but that's like, it's just how I see it. But again, not to sound like a broken record, this should give you guys all extreme confidence that, okay, first of all, yeah, we're right on trend, so nothing's abnormal there. But, okay, like let's just keep checking in on this. If we come back in a week and we've dipped down to the 5, that's going to be disappointing, right? Let's say it's mid-October and we're down to 89,000. It's going to be rough for people, but it's also probably going to look like a buying opportunity. Could it go to the 4? Yes, it could do all these things, but probabilistically, you're still in a 50-50 range on an uptrend. And, I still think it could be a good buying opportunity. Could the technical people be right, or at least the technical people that think that we're topping and like we go back down to, a 4 or a 3? Sure. Then I would have been completely wrong about this because I put too much faith in the 4-year. But, all I'm saying is we're just probabilistically right on trend, slightly above the median, which is 50-50. Mode is, as I said, not very helpful. But mean is slightly above trend. Just so many numbers here we can look at to get confidence in. I also think, Daniel, that just the way my markets kind of are, like I have less confidence that it will, right? Because this is also kind of a meme or an idea that's going around is, hey, Bitcoin's maturing, Wall Street is here, you can long, you can short, which by the way, you could short in December 2017 too. But with the CME futures and SIBO. But, people are sort of saying, the cycles are over. I have yet to hear someone who has said, and to be clear, I don't listen to too many different commentators, so you guys can point me out, but I have yet to hear someone say, the cycles are over, I believe we'll follow the power curve due to this, this, and this. Then I would be more interested in what they had to say. Most people don't even know what the power curve is. All right. Most people have no idea what these numbers are saying. Most newsletters are just telling you extremes, right? Probabilistically, I think we're in a very good place. I'm not going to show it today, but I've showed the Bitcoin market cap versus gold versus the monetary base versus broad money. In each 3 of those categories, by the way, the percentage is lower and lower and lower, right? So we're 10% of gold, 2 trillion versus 20 trillion. 7% of the monetary base, 2 trillion versus 2.6 trillion, or sorry, 26 trillion. 5%, if you add those two together, right? Or less, 4.9%. And then if you take higher valuations like treasuries or whatever, we're, lower than 5%, getting down to 1%. So even though I think you can say that the smoothness here of this curve has to do with the ETF approval, right? And more Wall Street entering. I think that's probably true. Bitcoin treasuries, people massaging the chart, taking, more positions to keep the price stable. That's true. I'm not going to call that until I see it. So actually, Daniel, I hope that we have it, because I think that's where we're still going to have that volatility. The volatility is where returns come from, and I still think we're in an unloved bull and an unloved asset. And how many times has Bitcoin been declared dead? These are great opportunities to, maybe shed a few here while remember, we're over 99 here. You can step it up to the 99th percentile. We're over it. Different chart, right? Not over the 99 here, but so it's a long-winded way of saying I'm not discounting that I'm not saying we don't have a cycle for sure. I'm not saying that the cycles are over, but I'm also saying let's not discount it until we see that they are over. In other words, I lean towards them still being on. That's really how I'm looking at it. If you guys have any other data to show that analysis is wrong, I'd be keen to hear it. I need to update my chart of spot Bitcoin volume versus, Bitcoin treasury volume, ETF volume. Spot Bitcoin volume still dominates. I think that's it for me, guys, today. Back. Appreciate you tuning in. You can always contribute here. No newsletter subscription. BTC Pay server right here on my site. I appreciate it. Value for value. I would get these charts on power trend and gold, as well as the PSR. I'll try to get them updated very soon. It's going to be fun. We're only 6,000 days into Bitcoin. Right. Only 6,000 days in, growing every 750 days. Sorry, doubling every 750 days. Thank you, Batya. Appreciate it. Thank you very much. Have a great weekend, everybody. See you Monday. If I can, I might try to, since I've been away, try to stream tomorrow, but might not be able to. But as you know, I just like to wing it. Thank you, Daniel. Thank you, everybody. Have a great weekend.